Hello traders, Gary Wagner here. Just about 11:30 in Honolulu, 5:30 in New York. It is Monday, 3rd day of December 2018, and this is the daily report for gold and silver. Following some forward movement in terms of the face-to-face discussion between China and the United States this weekend, we do have rallies across the board. We've got the precious metals moving higher. We also have equities moving higher. First to gold. Gold up $10.30 with most active February, now trading at $1236.20. That's about an 0.8% move. Silver really moving nicely, up 1.7% at $1446. Platinum gaining about 1% at $807, and palladium is up about 1.5%, up $16 at $1161. Now, that's all within the tailwinds of a weaker U.S. dollar, but the dollar is only down about 0.3%, 96.91. So when you see, for example, gold up 0.8%, you know that 0.5% of that is directly due to buying in the market. There is a lot of buying going on in the precious metals markets. In terms of U.S. equities, a 287-point rise in the Dow, 25,826. S&P also gaining ground, up 30 points at 2790. And lastly, the NASDAQ Composite at 7438, gaining almost a full 1.5% or 107 points. So traders, absolutely no doubt, we had a nice upside move in the precious metals across the board, and we are long at the same time. Yesterday, I did send out a special trade alert, and what it in essence asked us as subscribers to do is to roll over the December position into a February contract so that you are long 2 golds. And the way that that would have run down, had you done it last night or this morning, it's always going to be the same differential between the two, but the numbers I'm going to quote you are from last night. Because when we put this out, December gold was at $1224.80, was up about $4.60. We got in at $1218, then out at $1224, so we made a profit of $6. But we also went long a Feb gold at $1,231. Now you add that to the first Feb gold position that we put on, which is at $1228.30. Currently, we've got Feb gold at $1236.50, so we are in profits on both positions and have pulled profits on the December. Now, let's talk about our exit strategy. I feel pretty comfortable about this trade right now on a technical basis because we've had the crossing of these moving averages and we are well above what was formerly a resistance area that now I believe is support. But we do have 2 areas of resistance that we have to look at. The first area is 1246. That is the 50% retracement. And the second area that we want to focus on is the 200-day moving average, which is at 1282. So assuming that the market continues to move higher, we want to see exactly how it will react at this first point of 1246. The high today is 1240, so we have not tested that area yet. If we barrel straight through there, then we know that we've got probably a clear-cut path to about 1262. However, if we find some resistance as it gets to 1246 and backs off, we might want to pull some profits there. We'll have to play that by ear and see how the market reacts at that point. But for right now, we are long 2 February gold positions, both in profits. Traders, if you recall from last week's discussions, we talked about the fact that this G20 meeting was critically important and it would determine the future direction of gold. Because what we believed is, although it would be impossible to resolve all of the issues that surround the current trade war, if the end came out where we had some sort of a rosy picture, in other words, forward movement, that would be enough to send the dollar lower and to move gold up higher. And I believe that's exactly what we saw this weekend and into the opening of the market today. Maintain your current long positions in gold. Maintain your current stops. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.